So, Larry, at least stocks have made some peace, at least at the moment, with a very flat bond curve. But what will we find out as we come into Jackson Hole next week? Are we expecting this academic symposium to turn market relevant?
I think some of us are. I think a lot of us are still scratching our heads on what happened. What was the inflection point that caused all this, especially with the long bond moving 14.5 basis points on Wednesday? But yeah, I think people are eager to hear if there'll be any good things dropped at Jackson Hole, because, you know, we've heard enough data from the ECB, I think Wednesday and Thursday, but they didn't really say anything that we didn't already know and understand. And so when you look at the Fed fund futures pricing in what they are, we're hoping to hear, some of us are hoping to hear 50 basis points cut is on the horizon, but I'm not going to put a whole lot of weight on it.
Now, today you've got everyone taking stances on the Fed, it seems like, getting ready for this big conversation, Larry. Loretta Mester, who didn't support the cut last time, one of the dissenters, basically says we need more time, but it's starting to sound like she could be open to a cut now, especially if the consumer slows down. Neil Kashkari says load up the shotgun and fire it with 50. So is this going to be a, is this going to be a big moment? Is there going to be a surprise in this?
I think there could be. I mean, this whole week's been a surprise. So what would cause the Fed from dropping a bomb one way or the other? However, when you look at like the fundamental data that nobody's really looking at or paying attention to, especially since Thursday, you have the Atlanta Fed revising third quarter GDP now estimates by 0.3%. And so you have that, strong retail sales, Philly Fed, which really overwhelmed us expectations on the manufacturing surveys.
Right.
Empire, yeah, I mean, on and on it goes. But I think it just tells you that the market does not care right now about backward-looking information. All it says to us is that July was not the start of a consumption-led recession.
Yeah. So, Larry, as a bond trader, at what point do you look to see when that trend ends? If the data here doesn't matter and it's the global data, do we just wait for some surprise, or is there just a certain point where vertical moves in the bond can only go on for so long? At a certain point, does the rate of change require you to think about taking a non-long position?
Absolutely. And I think right now, I'm overstating the obvious to say that the 10s, 30s are in severely overbought conditions. That's not to say that it can't go lower. It just means that it's much tougher to get it lower than what we saw this past week. And I think the play right now is on the short side a little bit, but keeping your trades a lot smaller.
Yeah. How do you get into that, Larry? Because I just want to jump in because I think this is really important. A lot of people are wondering the same thing right now. How do I approach the bond market if I do think it's a short?
Yeah, I think it's a short right now. You sell bond futures, or if you can sell a bond, if you can get the margin to sell a bond ETF or express through options, but just keep your stops really tight. It's like last time I was wrong or maybe 2 times ago, I was dead wrong about the steepening, the 210 steepener. And you know what? I was so wrong. It's one of those things you learn after 30 years of doing it that I just reversed the position on a very small basis, saying I'm wrong. The Fed surprised me, and I just changed directions. And I think right now it warrants, I think the odds are perhaps in your favor to be short a little bit, looking for that bounce, because at some point the fundamentals will take over. Eurozone is not saying anything that we don't already know, and the trade tariff talk continues to go on and on and on. So I think it's worth the effort to put a short-term short into the market.
Yeah. So, Larry, is it going to be just the bonds? If it does short, if that short pays off for bonds, will shorts in stocks pay off? Will shorts in gold pay off? Because everything seems so hinged around a rate cut cycle. The only thing that might send bonds the other direction is if there's a development in the global economy that keeps Powell off from doing a cut cycle. But I don't know, it just all the ties seem to come back to the same place, whether you're gold speculating on this, equities speculating on what it means for valuations. If the time to short TLT comes, is it the time to short just about everything else?
I'm not so sure about that, because we saw a lot of disconnects this week. Look at Thursday, when you had a brand new fresh low in 30-year long bond. You had you had both Japanese yen and Swiss franc fall out of bed. You had the stock market flat, and then you had the 210, like, you know, kind of dancing towards inversion intraday. So all that to say, there's an enormous fracturing going on in the markets, and to sell gold right here, you know, I'm not so sure, because I still think gold is a relatively cheap hedge.
Okay.
And unlike you know, buying government bonds, but I'm not bullish on gold. I'm just stating a fact that I'm not so sure that's the play, although that's severely overbought as well. And news came out that ETF gold buying is at a 6.5-year high, and that's typically a sign that it's time to sell it. But I'm not a technician.